Well, US buyers seem on strike despite S&P 500 company earnings being better than expected. We cover why all eyes are on gold, continuing to hit brand new record highs, while we need to watch Tesla, which could swing 8%. My name is Jessica Amir. It's great to have your company for the daily. Today is April 22. Thanks for your company. So trading in Australia, of course, resumes after the Easter break. And it's great to be back indeed. While Australia begins early voting ahead of the national election, polls do suggest, though, and betting agencies alike both suggest that Labor might be likely to win when the election takes place in just under 2 weeks. So as for trading volume, you'd expect it to be thin. Well, we call that trading volume to be thin. This means that markets this week could be very volatile, and moves in either direction could be volatile, given that there's so few people trading, given we do have many Aussies still on holiday. But today you might expect selling in the Aussie market, but not as much perhaps as we saw in the US overnight, with the NASDAQ 100 falling 2.4%. Quite another dark day in the US. The S&P 500 also met a similar fate. The S&P 500 falling almost by 2.5%. But what's really interesting and very telling is perhaps an ominous sign that we're continuing to see the S&P 500 and the NASDAQ start to erase the gains that we've made up off their lows, and we are now seeing the market gap down lower. This is basically large volumes of sales coming through, and again, it's just an ominous sign. And this is happening at the same time when the VIX, the market's fear gauge, is rising. Essentially, sentiment towards the US is souring, and again, this is very telling because this is despite S&P 500 company earnings that is continuing to be released, so far better than expected. But what is happening is we've got continued tariff uncertainty that's thick in the air. And overnight, the US President Donald Trump called the chair of the US Federal Reserve a major loser, demanding that he cut interest rates. So while Trump is coming off as uncouth, investors are really awaiting their next clues as for where we could go. But for the most part, it seems investors do think we are going lower. Of course, the International Monetary Fund, their World Economic Outlook is released today, and that might be a little bit gloomy. And of course, we do get some very large earnings reports out today. One of those is Tesla in the US. Later this week, we hear from Alphabet. This could be really telling. Now, let's just dive to Tesla because it is expected to be a very gloomy report. So Tesla, their revenue is expected to slump to $21.4 billion in the quarter, down from the prior quarter's $25.7 billion. Now, their gross margin or their profits, they're expected to also fall as well from 16.3%. So yes, they're still a profitable company. And remember, they are the most profitable EV company in the world. And so Tesla's still gross margin is around 16%, and that's where it's expected to fall to exactly 16%, down from 16.3%. Options pricing is really telling. Now, this suggests that Tesla could move 8% in either direction. If we get an earnings surprise, as in the earnings are not as bad as feared, then Tesla shares may jump 8%. But if they're weaker than expected, far weaker than the disappointments that we are expecting, then Tesla could fall maybe 8%. Now, that's what the options pricing is suggesting. There's a lot of bearish sentiment about Tesla as well. In fact, their earnings have been downgraded heavily by the average Wall Street analyst. Tesla's earnings have been downgraded heavily. Their operating profits have been downgraded heavily. there's been a drop in expectations of their operating profit by 17%. It's hard to believe, but the average Wall Street analyst is now quite bearish. So perhaps that maybe sets up a bar that we could maybe see a beat if we see results not as bad as the ghastly results that are expected. But that remains to be seen. Let's see what happens tonight. Stay tuned to Mumu's platform. The Earnings Hub will be your source of truth. Will they deliver an earnings beat? Check out the Earnings Hub and that'll be your guide. If they beat, then their shares will likely rally. As we said, just reiterating that point, if they deliver sour grapes, their shares will likely fall further south. Let's move on now to the Aussie share market. It's pretty resilient in comparison to the US. The Aussie share market last traded last Thursday, and we've held up off our lows, a stark comparison to what's happening in the US. So the Aussie share market last traded about 6.5% up off its April 4 low. So we've essentially gained almost 7% off that low that we hit back in early April. So yes, we're out of a correction. Remember, a correction is when the market's dropped 10% from a record high. But remember, the Aussie market is now down 8.6% from its record. But what is supporting the Aussie market is gold. We've been speaking a lot about gold continuing to surge. And so gold miners on the ASX are really supporting the Aussie share market this year. And the fact that we do have gold is really triumphantly continuing to surge to new records. Overnight, it punched to 3,400 or well above that, taking this year's gain in the precious metal to 30%. This is a stock that we've been speaking about a lot, encouraging you to really look at it now if you already haven't. Newmont, obviously the world's biggest gold miner. They pay a dividend, so you can get a quarterly dividend. But the case is there for gold continue to rise. And why is that? Well, demand, very simply, is outstripping mining supply. And you'd expect mass hoarding to continue in gold. Why? Well, there's tariff-related US and global growth concerns. And you would expect strong central bank and institutional demand to pick up. That's why Citi overnight increased their price target for gold, now seeing gold rising $100 in a matter of few months. But when gold rises by $100, this stock rises far more than that. So Citi is expecting the gold price to rise from $3,400 an ounce to $3,500 in just a few months. But there, of course, there are many ways to invest in gold. You can buy the physical gold ETFs. The world's biggest is GLD. That's the SPDR ETF, ticker code GLD. Secondly, you can also invest in gold mining ETFs. The world's biggest gold mining ETF is GDX. That'll give you exposure to growth in the world's biggest gold mining companies, and some of those are returning dividends as well. So you're getting the growth in the gold, and you're also getting dividends as well. And the third way is what we just touched on. You can invest directly in gold mining companies. And we covered the gold mining giant, Newmont, and that pays a dividend as well. Well, indeed, it has in the past. In other news, you should be mindful that Macquarie shares will probably rally today. That's because Nomura is set to buy Macquarie's asset management business for $1.8 billion. And that's the daily. Thanks for your company. Stay safe. Happy trading. We'll see you tomorrow. And we'll cover everything you need to know about Tesla.